Can Alibaba go back up to 300? Okay, so I think a lot of you who watch this video could have invested in Alibaba since the early days. Okay, maybe you have been buying and holding since 2020 to 2022. All right, and then your average price is around 200, and then maybe still suffering losses. So that's why you are searching for answers in this video. So your question, I believe you are asking is, can we still make money from Baba? Okay, maybe from those of you who invest early days, or for new investors who are getting started to interested in Alibaba. Okay, so I will be sharing my view and what factors that will make Alibaba go back up to $300. All right. So before that, let me make a short introduction about myself. My name is Daniel Lim. Okay, I'm a stock investor and also a 7-digit portfolio manager. I have over a decade of experience in investing and also helping people build wealth safely and consistently from the stock. Yeah, as you can see, I give a lot of talks over here. And this photo here is some of my members. Okay, these are from Singapore and these are from Malaysia. Okay, then I also have a YouTube channel as you are watching here, right? Okay, I have 27,000 subscribers and I also have a Telegram community here. Okay, and I've been leading and guiding stock investors inside there. All right. Okay, so let's get started. So what is my secret here? Okay, my secret, to identify stock opportunity. So before I share with you my views, on how Alibaba will go back up to $300 here. Okay, I will share with you a certain methodology first. Okay, and once you understand my methodology, then I will apply this to Alibaba so that you can understand. Okay, so let's go now. Stock price, right? Okay, a lot of people do not know this fact. Okay, so they keep on saying how stock price can go up, how stock price can go down, right? Okay, it's essentially boils down to this formula here. Yeah, so the stock price is essentially revenue per share times the price to sales ratio. Okay, so what does this mean here? Okay, revenue per share and the price to sales ratio here. So essentially, revenue per share. Okay, that means in one share we are comparing to the revenue. Okay, how much is the value of the revenue if you own one share of the company, right? So when we look at revenue per share, it means we are looking at the company's fundamentals. Okay, so when you look at the revenue per share, is we want to know how is the company's business doing, okay, and are they growing bigger? Okay, and of course, when we want to invest in a company, we want to make sure that the revenue per share keep on increasing. Okay, so when we look at revenue per share, it is a fact. Okay, it is based on numbers. Okay, and we are looking at the share value. Okay, these are all evidence based. Okay, now the next thing, perhaps a lot of people don't know is this price to sales ratio here. So price to sales ratio is what? Okay, it represents a market sentiment on that certain stock. So when we look at price to sales ratio means we are looking at how much the market is willing to pay to own $1 of revenue in this company. All right. So let's say, for example, this company here, how to say, that they earn a revenue, $1. How much is the market is willing to pay? Certain companies that are willing to pay 10 times, certain companies willing to pay 5 times. Okay, different companies have a different price to sales ratio. So when we look at price to sales ratio, essentially it measures the market sentiment. Okay, that means it may be affected by the market's emotion, the perception of the company, or the confidence in it. All right. So as you all know, the higher the price to sales ratio, that means the more bullish it is a certain market on that company. Okay, and if the price to sales ratio is very very low, that means very depressed and stuff. Okay, so this is the basic. Okay, revenue per share times price to sales ratio is the stock price. Now let's get started. So one example, let's say for example, when I say depressed, for example, very depressed stock price, let's say for example, the revenue per share, of that company is $1, and the market, only willing to pay 1 time, which is the price to sales ratio. So because of this, the share price is only $1, then suddenly, the price, the company is posting very bad results, for example, or there's a very bad sentiment on the company. Then despite even the company grow their revenue per share, but the market, don't like the company, and they decided to assign only a 0.5 times. They're only willing to pay 50 cents, to own $1 of the share of the company, for example. So if you times it, the price is still at $1. That's why you see certain stock, despite the price keep on going up. The revenue of business keep on growing, but why the price keep on stagnant only? Is because of this. And then another example, same thing now. Continue to grow, but the market still only willing to pay 0.5 times. Then the price only go up a little bit. And I think this one is very very familiar, and that is Alibaba. This is one example here. So another one is like this. Another one. Normal one. Normal, this one is very simple. The company is very comfortable with the company, nothing too hype up and stuff. So the market has always been assigning 1 time price to sales ratio to them. So if the revenue per share keep on increasing, then the share price will also increase in tandem. Okay, so this is Alphabet, for example. Later I will show you in real life. Okay, the example. Okay, the next one, okay, is confident. If you are able to find companies, okay, where the market keep on getting more and more confident on the company one, it's good. Okay, you know why? Because this is what I call a double booster. So first, okay, the share price increase can be coming from the revenue per share, like $1 increase to $2, then $4, right? But the difference here is the multiple, which is the price to sales ratio. The market getting more and more confident on that company. So they are willing to pay more and more. First time, okay, one time. Then after that, 2 times, and then 3 times. So you can see there's a multiplier effect. So 1 times 1 is 1. Then 2 times 2 is 4. So you can see why certain stock, okay, they go up, okay, exponentially. It's because of this. What kind of company? Microsoft. Okay, so I'll go through with you, okay, example. Okay, now, let's say, for example, Alibaba. Okay, Alibaba first, okay, revenue. Remember this formula, okay, revenue per share times price to sales ratio is the stock price. Okay, so as you can see, Alibaba, okay, for Alibaba, you can see that this line here is revenue per share. So you can see, instead, the revenue per share of Alibaba, no issue, The company is not to say really declining, it's keep on going up, Okay, so by right, the share price should increase. Okay, but why? Why the share price, okay, which is this in orange color one, okay, it's quite good, keep on going down, very flat, or very, very deep. This is what I call very depressed. Okay, why? It's because of the price to sales ratio down here, which is the blue color button. Yes, I saw the blue color line. Okay, so this blue color line, you can see, okay, keep on going down only. So because of this, why? Because the market is not willing to pay a higher multiple to own Alibaba at that time. So despite, okay, it going up, but because of the price to sales ratio keep on going down, that's why the price also keep on going down. So hence, you can see here, okay, the revenue per share of Alibaba, let me tell you, they grow in total since March 2016 here, they grow at 800%, okay, from 6.4 grow to how much? Grow to 58.4. That's what? That's 800%. By right, the stock should also go up 800%, right? But no. Why? Okay, because the stock price only go up 43%, Only go up 43%. That's very, very sad. Okay? Why? Because the multiple, instead of maintaining or even increasing, instead it declining, but decline by negative 84%. So that's why the price has always been depressed. Okay, so this is Alibaba's story. Okay, the normal one is like Alphabet. Okay, Alphabet, Google. You can see the price to sales ratio here. See, maintain stable one. This is a very good example. So why the share price continue to go up here? Why? Because it's been led by the revenue per share. The revenue per share keep on increase. If the multiple maintains around the same range, okay, then yes, okay, the stock price will keep on continue to go up because the revenue per share goes up. So that's why you can see in total, there's not much difference. Okay, like Alibaba, you can see the revenue per share increased 400%. Okay, and the stock price increased by 350% like that. So there's not much difference here. Okay, of course, the stock price will change depending on the price to sales ratio, but the price to sales ratio, you can see it's not much difference, okay, because throughout the years, it's around the same, around the flat one. Okay, then the next one is the confident one. If you can find these kind of companies, then you will earn a lot because the share price increase not because of this revenue per share increase, it also increase multiplied by the multiple here. And this is from Microsoft. This is one very good example. You can see, see? So the blue color is the price to sales ratio. Can you see that? What happened to Microsoft? You see, last time, okay, the market is willing to pay around 3.6 times only. Okay, but as time goes by, you can see, why the market keep on willing to pay higher and higher to own Microsoft. Okay, until 14 times. Recently, of course, okay, it's at 13 times already. Okay, and not only that, okay, their revenue per share, which is this orange color line, okay, or reddish orange, okay, has also been increasing at the same time. Right? Hence, that's why you can see the stock price has been increasing a lot. Yeah, so you can see, okay, so the stock, okay, the revenue per share increased only by 200%. So by right, the stock should also go up 200%, right? Okay, but why is it the stock price increased in total 980%? That's because the price to sales ratio also increased together. So you can see the formula. So if I type this one, revenue per share times the multiple, then you will increase even higher. So if you can find these kind of companies, right, then you will make a lot of money. Okay, so Microsoft is a very good example. You want one extreme example, which I call hype one, Palantir. Okay, you see Palantir, okay, yeah, the revenue per share is increasing, but it's not increasing as fast. Okay, you can see the price to sales ratio here, quite scary, 100 times price to sales. And that's why the price right now went up to 140. So you can now understand this price increase okay, is supported by what? is supported a lot by the price to sales ratio, not really by the revenue per share. When we want the price to go up, we want it to be also supported by the revenue per share. That's the real, like I said, okay, this is the based on facts, okay, based on evidence, there's a fundamental to support the share price. But in terms of Palantir, I would say a lot of the valuation is based on, okay, market overconfidence and a lot of air. I would say the air is the one supporting the valuation currently. Okay, so you can see that's why the revenue per share, I tell you, only grew by 57%. Okay, but why the stock price can grow 1,400%? That's because of the price to sales. The price to sales increased 800, close to 900%. So it's been supported by multiples, supported by the market sentiment, not really yet by the revenue per share. Now, I won't go into a debate, okay, on Palantir's fundamentals. And I know they are the monopoly, they are the best, they're the only software that can do blah, 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 this kind of thing, okay? I shall leave it for another video to make it, okay? So I just want you guys to understand this, okay? This is a very fundamental concept, okay? Okay, from me, okay, and BIA. This is how we let our investors to identify opportunities, okay? So before I move on, okay, if you hear this methodology, okay, this formula here, the idea behind it, right? Okay, if you hear from other stock gurus, remember, okay, you hear it from me first, okay, from me and Better Investing Academy, okay, can I? All right, so next, so now that you understand the whole concept, okay, on how share price move, right? So the next question is, can Alibaba, go back up to $300? Yeah, so before I move forward, okay, so I hope you all learn something over here. Now, if you are finding a stock community here, I do have a stock community, of course, and we have been following Palantir, CrowdStrike, and of course, Alibaba. Okay, so if you want, okay, you can see I've been guiding our members here, okay, and sharing during the Trump tariff, the time like the market crash. Okay, let's say for example, what did I share? Okay, I share here. Let me share. Let me go up. There's a guide that I share with them one. Hold on. Here, this one. Okay, yeah, here. Okay, so I've been sharing with a lot of them like since March, 8 March here. Since 8 March, okay, like for example, the Trump tariff drop and stuff, and many got panicked at the time, right? So I've been daily guiding again the community here. Okay, posting every single day my view, how you should think, how you should strategize, okay, and maintain your emotional stability and stuff. So if you are an investor, okay, who are searching for a community, you need guidance, then hey, okay, you can join my Telegram community, and you just need to click the link, okay, in the description down below. Okay, all right. So let's move on right now. Okay, next. So remember this formula. So Alibaba's price right now, okay, is around 103.49. Okay, 103.49. And why? It's because the revenue per share right now is at $58.40. And the market is paying them at 1.95 times. Where do I get this information? From here. From here, Alibaba, you see? Okay, so it's 58.4 revenue per share currently. And the market, okay, is so depressed that only willing to pay them 1.95 times. So if you times them, this both is at 113 and 88. So it's the same as the share price today. All right. Okay. So do remember, if we want Alibaba, okay, this one, the price here to go up, all right, it's important for the company fundamentals here to also go up and the market sentiment to change. Because currently, right now, 1.95 times, the market is very, very depressed. Yeah, you can see this blue color one. See, the market is like they don't like Alibaba for some reason. Okay, they make it very, very depressed. One time only, impossible. It's a tech company, it's a leading e-commerce company in China and stuff. Okay, so the thing is right now, okay, we need to make sure these both can increase. If they increase, then the share price will change. All right. So first thing is we need to look at the price to sales ratio. Okay, the price to sales ratio, this one, okay, remember it's 1.95 times. We want to make sure it goes up. So right now, okay, in my previous video, which I did on December 2024 here, okay, I said, okay, that there are a few things that Baba needs to, okay, repair, okay, and change in order for the share price to go up, which is this one. Okay, last time there's an issue with their management, and the government and stuff, so there's a lot of uncertainty. That's why the market don't like China stock at that time. Now they are improving already. If you have been following my videos, okay, I mentioned that their management right now are very certain. They are more willing to share information, and they are now changing the business model already and stuff. Okay, and then the government also right now, okay, have already returned confidence to the investors. Okay, there are no sudden intervention already. So that's why the price to sales ratio is improving. All right, why? Like I said, this one, for example, okay, at that time, if you have been following the news, okay, the government say, that at that time, okay, they have been meeting the business leaders such as Jack Ma and other tech companies at that time. All right, and then they say here they are trying to instill confidence already, and then they are reassuring them, okay, and giving them the support, okay, for the tech companies, okay, in China at that time. So that's why you can see the price to sales ratio that time. Okay, that time, if you remember, it's very, very sad here, right? 1.4, 1.5, like that only. Then when this news comes out, you can see the price will go up. That's why there's a multiple re-rating suddenly. So suddenly from 1.4, 1.5, right? Suddenly there's a re-rating here to two times like that. Like that. So that's why the price go up. Okay, there's a sudden change in the sentiment. Okay, here, like I said, in the perception, okay, in the confidence already. So there's a multiple changing here. So the next one, okay, for Alibaba, if you wanted to go up, the price is this. Okay, that I mentioned in December 2024, that time that they must re-accelerate their growth back, okay, to 10 to 15% per year. Okay, if they cannot, okay, the valuation will still be very, very depressed. Why? You can see for Alibaba, okay, if you are investing, do you know that their growth is so sad? Okay, previously, why the market is willing to pay a higher multiple? Because they are growing at 30%, 50%, 30%, 40%. So that's why the market, as you see the blue color one, the market they like this company. It's a high growth company. They are willing to pay a very high price. Here, 10 times price to sales, and then 8 times price to sales and stuff. But then suddenly the growth decelerated a lot. One time only grow 2% here, 8% here, 6% here, like that only. Yeah, so that's why the multiple is very depressed, coupled with the politics in the country and stuff. So that's why very, very depressed. But so that's why the price to sales ratio, okay, previously have already settled. Okay, now it's about the fundamentals. The fundamentals, Alibaba must continue to grow. And if they can continue to grow, the revenue per share also increase. And this will also help the price to sales ratio, which is the market sentiment also. Because the market sentiment will change, okay, if a certain business are able to show higher growth. Do you understand me? Okay, so this is the fundamentals here. Now, so the one thing I want you guys to take a look at, okay, is that there is a potential, okay, for Alibaba to start to re-accelerate already, okay, their revenue per share. And you must take a look at their cloud intelligence group revenue, and that is their AI and cloud business. Okay, now I won't share much, okay, in this video here. If you really want to know what I mean, okay, you can go to my YouTube and watch these 3 videos here. Okay, these 3 videos, I tell you, I compiled 2 years of research and my knowledge, okay, everything I know, okay, on Alibaba into these 3 videos, right? If you got the time, I tell you, it's going to be worth your time. You want to know everything about Alibaba, just go and watch it and you will understand everything. Okay, so this is the thing. Now, so what is Baba's valuation currently? Okay, because you say you wanted to go up to 300, right? So is 300 the valuation, okay, for Alibaba? Okay, so let me help you now, right now. So right now, okay, this is the multiple, this is the revenue per share of Alibaba, and that's why this is their price right now. Okay, the next issue that we want to ask is, what is Baba's reasonable multiple? Because the market is now paying 1.95 times only. Okay, but what is the reasonable multiple that is supposed to be given for Alibaba? Okay, this is the one that we need to find out, right? Okay, so I already done everything, the research. Okay, so you just need to listen. Now, so what is the reasonable multiple? I already done my research and stuff already. So the reasonable multiple is at 6 times. 6 times price to sales instead of what? 1.95 times. Okay, how I derive from this? So I compare with a lot of those cloud companies. Okay, so if you watch these previous 3 videos, okay, Baba is moving from e-commerce to become an AI company already, AI and data cloud provider company. So that's why I'm comparing with Microsoft, okay, and Amazon. So in the US, okay, Microsoft, the market is very confident. They like the company. Are willing to pay 12 times. In Amazon, the market is paying 3 times. Okay. Then in China, okay, I compare with 700. If you all don't know this, Tencent. Okay, in Tencent, the market is paying them 6 times price to sales, 6.3 times. Okay, but Baba is only at 1.94, 1.95 times only. All right. So when I just take it in the middle, okay, I take it in the middle because the lowest was 1.94, the highest was 18. So I take it in the middle average. Okay, the price to sell for Baba is around 7.31 times. All right. But then again, just to be conservative, I compare the same price to sales that the market was willing to pay 10 cents, okay, which is at 6 times. So I just compare it to 6 times. So that's how I derive my valuation of Alibaba here. So if the market is willing to re-rate the multiple of Alibaba from 1.95 times to 6 times, then their price is supposed to be at $350. Okay, so it's very, very important, okay, for Baba right now, okay, to focus on their growth, because the price to sales ratio, the multiple side, okay, on this below here, they have technically solved already. It's no longer an issue. The only issue is the growth here, which is the biggest factor to affect a certain company's multiple. So that's why they must continue to grow. And they are able to grow, but affect the price to sales ratio, and it will continue to go up. Okay, so this is the price right now. So if they are able to continue to show, give confidence to the investors, and they like the company already, then yes, the price to sales ratio will start to re-rate, okay, from 1.95 times to 6 times. If you go to 6 times, then the price will be 350. And again, it's dependent on what? It's very dependent on this one, the growth. It's very important for Baba to show growth, and the growth, it will come from their cloud business. Okay, from their cloud business over here. Okay, right. So the next thing that you guys need to do right now is to continue follow up. Okay, continue follow up with Alibaba, because you cannot just buy and then just hope that the price will continue to go up. All right, you need to continue to follow up, and that is their cloud business. Okay, so you can follow my YouTube, because I've been sharing a lot on Alibaba here. Okay, and I will be keeping track for you guys lah. But of course, if you want instant updates, or sometimes live Zoom sessions, all right, from Alibaba, or sharing from Palantir or CrowdStrike, you can join our Telegram community. Okay, like for example, you can see that in this Telegram community, okay, I've been leading them. You can see I typed the word Zoom. Okay, we have been doing a lot of Zoom sessions. Okay, a lot of Zoom sessions with our subscribers here. Yeah, so sometimes there are certain updates on CrowdStrike or Palantir, then we will open a session. So if there's Alibaba, okay, perhaps we a very important one, okay, and then I will have a Zoom session with you all here. Okay, so it's free, okay, and then just do join. Okay, click the link down below in the description or even the comment, then just join this Telegram. Okay, so again, guys, okay, I do hope you get a lot of value from this video. All right, so ask anything. If you have any question, you can ask in the comment down below, and I will definitely do my best to answer you guys. Okay, so thanks for watching, and I see you in my next video. Thanks, guys.